Hello, good morning. This is Ayazuvddin S Khan from Pune, Maharashtra State, India. We are in the mode of knowing the basic things about Income Tax Act 1961 before touching our main topic, that is subject-wise income tax disputes and Supreme Court judgments on them right from 1970 to 2020. We have already got familiar with some of the basic things about Income Tax Act 1961. In that line, today we are going to have discussion on the word or on the term tax. This is also very important, having practical importance, and here ends the journey of the Income Tax Act 1961. Here at this point, the Parliament has achieved its objective of collection of revenue in the form of income tax. Okay, so this is very important term. So we'll discuss it and just give a patient hearing to this lecture. Tax, if suppose somebody asks, what is tax? Have guesswork. You guess it. You imagine what it could be. What it could be according to your guessing. What it could be. Just ponder, think, and try to bring something out of your pondering, out of your guesswork, or out of your imagination, the idea of tax. I think I also belong to, I am also like you, and if suppose along with you, I also guess, I try to understand this term, tax, what is tax. So you and me, I think, most probably come to this type of idea, vague idea, rough idea, obscure idea, rough, hazy. That is good. English has given a lot of equal words, enjoyable equal words. It is up to you to select the word and enjoy its meaning in your mind. Okay. So main discussion is like this. So we get this rough idea about this word tax like this. It is burden. It is burden on somebody. It is burden. Tax is equal to burden. Like this rough idea we get. And that idea, I think, that idea is correct. Whatever you think or you have imagined, I have imagined along with you. So this we come to this sort of rough idea about the term tax. So this is, I think, it is proper. And if we compare this term with that appearing in the taxation law, that is Income Tax Act 1961, so we'll see our guesswork was not wrong. Okay, so let us proceed. Let us go ahead. The word tax, this is also important. This what I'm just right now I'm talking, that is also important. For knowing the meaning of any word as far as income tax law is concerned, or any statute is concerned, they say statute. For act, they call it statute. For understanding any word from any statute or Income Tax Act 1961, First, we have to go to Constitution, our Constitution. We have to refer to our Constitution, the description or the definition of particular term you want to know, the meaning of it. Okay. So, first source of understanding the concept of any word, legal word, I mean word related to statute or act, that time, not general words. So, first we have to understand the meaning of particular term, legal term. Now, before us, the legal term is tax. To understand it, first we have to go to Constitution, our Constitution. It says nothing on the, rather it gives no description, no definition of this term, tax, but it says it is one of the items. It is one of the items of your central list, as we have learned, central list, then state list and concurrent list. These are the three lists for making the law on the subjects contained in this three lists. Subject matters that contain in these three lists. So, Constitution only says, for taking tax from the public, only union can, or this union can have law on this subject, that is tax, surcharges, fees, services, all this, these taxes is the item of central list, and only central government or the union can have the law on this subject. That is, I think I am clear up to this point. So, we are discussing the word tax. So, Constitution is not giving us any help to know this term, but only the Constitution says only it is the item of central list. Okay. Then the next, as per the procedure of knowing the legal word, then we have to go to the respective act. This word tax belongs to the Act, Income Tax Act 1961. So, we have to go to Income Tax Act 1961 and find out whether that act helps us to understand what is tax. Okay. So, this is the second method. If this act also fails to give some idea or concrete or firm definition or description of this term, or for that matter any legal word, then we have to go to the universal source, the common source. The people go whenever they find the meaning of any word, that is, I mean the book of words and their meaning, that is dictionary. We have to go to dictionary like this. First Constitution, then respective statute or act, then your dictionary. Like this we have to go to understand the particular legal word. If you don't find in the first source, that is Constitution, you have to move to second source, that is respective act. The term which you find in particular act and there is no meaning, or you want to know the meaning, then that respective act is the source of help for you. And if suppose that also does not give the correct meaning or does not give you description of that thing, that word, then third source you have to go to third source, that is dictionary. Okay. So, as I told you, Constitution does not help us to get the idea of this word tax. However, Income Tax Act 1961 gives the idea which matches our what you call guesswork. That is, it is something some burden on the individual, or some entity will have rough, what you call, better have general term, entity, not specific, because individual means it is not tax is not applicable to only individual, it is applicable to non-individuals also. So that it is better to have this word, entity. So it is burden on some entity. It is burden on entity. So income tax gives the what you call idea about this word tax. It says tax means income tax. Tax means income tax. That that is to be taken. That is to be taken as per the provisions given in this Act, that is Income Tax Act 1961. So this Income Tax Act 1961 is helpful to us to get the idea about this word tax. Tax means what you call income tax. As far as our discussion is concerned, this description or definition of word tax means income tax, as far as our knowledge is concerned about this word tax. Okay. This is all about the description of this term tax. We got the fair idea about, we have got the rough idea, now we have got the fair and firm idea about this word tax. It is, tax means income tax as for income tax purpose, or as for purposes of Income Tax Act 1961. Now we'll go ahead. Tax, actually government takes the tax. Government takes the tax, isn't it? We know this thing. Government takes the tax. Now question comes, why government takes the tax? Because they require money. We'll ask question to ourselves and we'll answer the question for ourselves only. Okay. So why government takes the tax? Isn't it? For meeting the expenses. They require money to pay something. Isn't it? For that my government takes the tax. So question comes, why government takes the tax? They have got mints, printing presses. They have got printing presses. They can print the notes as many as they want and spend that money for their expenses, or use that money for payment of their expenses, whatever expenses they want to have. They can make payment of those expenses with the new brand notes. They can print from their printing presses. They are the owner of printing presses in India, isn't it? So natural doubt, a human honest doubt, it is honest doubt. Why not government prints the notes for their money requirement, and why they come to public and ask for money, give us money, this is the law, you pay us, obey us, otherwise we will send you to jail, like this. Okay. So, natural, honest question is there, why not government goes for printing notes, new notes, and what you call, fulfill their requirement, satisfy their money requirement. That is the honest question. But economics comes in the way. This says it, rather economics help us to know why government should not go for printing notes to satisfy their money requirements. It says, economics says that if you go for printing notes, you bring new notes or supply of notes or heaps of notes in the open market, what will happen? People have a lot of money. There will be what you call flood of money in the market, and all will these things which public purchases in the open market, that will be chased like anything by the buyers, because everybody has got a lot of money. So what will happen? There will be shortage of things, and there will be more money supply. People will have money, notes in their hands, but there is nothing to purchase. All finish. So that way. So that is not advisable. Economics says that is not advisable. So there should be balance, isn't it? So there should be limit also in pouring money in the open market, and supply we have to take the care of supply also. So all these things, that is why government doesn't go for printing notes to satisfy their money requirement. Okay. So that is why government comes to us and asks us, you are having income, sufficient income, you have got ability to pay. That word important. That is the thing. It is in the mind of government. It is the mind of government or parliament when it passes the Income Tax Act 1961. You have ability. That means you have got money. You have got money. That is why we are coming to you and asking you to pay the tax. And we pay the tax in the public interest. We pay the tax because government has also to run the administration, and manage their expenses. So let us have some brief idea about the purposes for which government takes the tax from us. Let us have the brief idea about the purposes of government for taking tax from us. So first purpose is like this: government has to pay the salaries of their manpower. Government employs manpower to run the administration. So government has to pay their salaries. Every month they have to pay the salaries for 12 months because tax is taken for a year for spending money by the government. So first purpose of government spending is, or the first purpose for for which government takes the tax is, it has to pay the salaries of their manpower. Second thing, then government has to pay the pension to the retired government servants. Then third one is that government has to pay the interest on the loans or borrowings that government has made or taken or made for managing their expenses, isn't it? When you take the loan, you have to pay the interest like this. When government takes the loan from domestic sources or from foreign sources, it has to pay the interest. Okay. So this tax is also required. This is the purpose. This is the purpose for which government takes the tax, that is payment of interest. When government has to pay the interest on the loans government has taken from the domestic sources or from the foreign sources. Then government has to give money or funds to the states according to the what you call statistics, or according to the documentary proof that some states are backward state, undeveloped states. So for development of such states, heavy funds are required. So the another purpose for which government takes the tax from us is to give funds to such states, such undeveloped states. So for that also government takes the tax from us. Then there is another purpose, and that is also very important. Sometimes government has to bring in from foreign countries medicines which is not produced in our country. Such medicines, they are essential medicines to save the lives of the people. So, if they are not here, they are not produced here, so government, with the help of our revenue, it brings medicines from the foreign countries. Then it purchases oil. That is, oil is the life. Oil. Nowadays, oil. Without oil, we cannot move. So, oil is the wheel of the life. So, government, with our tax money, government purchases what you call oil. Because oil is there in our country also. Our country also produces oil, but that is not enough for our requirements. So, naturally, government goes to foreign countries and brings the oil, purchases oil with the tax money that we pay to it. Okay. So, there are high-tech items, technical items, heavy machinery, plants, then so many other number of things for which our country requires for development purpose or for other essential purposes. So such things government has to bring from outside sources. Outside sources means foreign countries. So they require this tax from us for these all these purposes. Very good. So we give the tax honestly, and government runs the administration, brings the things for us, and make our life comfortable. Okay. Then another honest doubt is there: this revenue in the form of tax, income tax, is it enough for government to do all these things? No, it is not enough for government to manage their what you call expenses. This revenue in the form of income tax only is not enough. So government depends on other revenue sources also. And what are those sources? The sources are like this: tax on the sale of goods and services, tax on goods, on sale of tax on sale of goods and services. Then there is duty on import, revenue in the form of duty on import and export of goods. Then government also sells its assets, and because of selling of such assets, government gets a lot of funds. Recently, I think government has sold Air India. Government has sold the Air India and got a lot of money, crores of rupees, lakhs of crores of rupees government got. So this is another source, that is selling of assets. That is another source of income. And governments being the owner of the public sector banks, that is State Bank of India, Punjab National Bank of Baroda, a number of public sector banks, government banks are there. So government is the owner of the bank, and whatever business these banks do and earn the interest, yearly interest, out of that belongs to government only after cutting all expenses. So that is another source, interest. Interest is another source of income, or rather revenue, to government, central government only, not central government. Okay. Then your dividend. Government is also the owner of some companies which are doing business, export business or manufacturing business, or what we call selling their services, in service sector. They are so government has invested money in service sector and production sector, as we can summarized like this, and they get the, at the end of the year, in those companies make the profit, government gets the dividend, being the owner of those companies. So government gets the dividend. This is another source of revenue to the central government. So these are the sources, and income tax is another source. All these sources, they bring money to the central government to manage its expenses. Okay. Now, we'll go ahead and discuss, beside income tax, government also takes from us tax, income tax, in the form of surcharge, and in the form of cess. Now we'll discuss. This is all learning. I have already become familiar, but I am making you familiar with these words all. No, so just remember it. This is all legal words and useful words having practical importance. Okay. So, apart from income tax, government also takes income tax in the form of surcharge. And what is surcharge? As I told you, surcharge, to get the idea of some legal word. Now here legal word is surcharge. So we have to go to our first source of knowledge, that is Constitution. Constitution doesn't give any help. It doesn't give meaning of the word, what you call surcharge. Only it says, the amount of surcharge will go to union, that is central government. Okay. So, our Income Tax Act 1961 also helpless, doesn't give the idea about what is surcharge. So, then we have to go to the dictionary. But we will not go to the dictionary. We will have what you call, will depend on our statutes, related statutes. The related statute for Income Tax Act 1961 is Finance Act. It is a elder brother of Income Tax, Income Tax Act 1961, Finance Act. We'll have this idea about finance, what is Finance Act and what for Finance Act is important, how it is related to income tax. We'll have discussion afterwards or during this lecture only. So, the word surcharge, Finance Act gives some rough idea. It says, it doesn't describe this thing, what is surcharge, but it says the amount of surcharge the government collects will go, whole amount will go to union, that is central government. Whole amount will go to central government, Consolidated Fund of India. Whole amount will go, the central government will utilize this money because whole belongs to union, that is central government. This much only your Finance Act tells. Then we can have fair idea about this term, surcharge. Surcharge means additional tax. That is safe description, very safe description of the word surcharge. Surcharge means additional tax. As Finance Act tells us, it is additional tax. So, income tax is basic tax and surcharge is additional tax. So, you have understood income tax, you have understood I think you have understood this also, surcharge. Now we will go to cess. Cess also, as a serious student of Income Tax Act 1961 or a student of law, you have to find you have to go to find the meaning of legal word that says. What is says? You have to go to our main source of knowledge, that is Constitution. It is there here for this word also, where Constitution is helpless, cannot help us. Then our Income Tax Act 1961 also doesn't give any help. Then no going to what you call dictionary to know the meaning of says. But says Finance Act, that is the elder brother of income tax. I am just jokingly telling, elder brother of Income Tax Act 1961. Senior brother of Income Tax Act. It gives fair idea about this word says. Says. So what it says, it doesn't give description or definition of says. It only says it should be used, the funds under this head, says, should be used only for specific purposes. The funds, the amount under this head, that is says. We have got Income Tax Act, we have got surcharge, additional tax, basic tax, additional tax, and now this is says. So says is also additional tax, but that Finance Act says it should be used. Government should use it for specific purposes. That is the condition. That is the condition for taking cess from us. That is the condition for government. That is the condition laid down by Parliament. Whenever you ask money for under this head, cess, from the taxpayer, you have to use for specific purposes. So as far as income tax is concerned, what is the specific purpose? What are the specific purposes? The Act says what is specific purposes? As the Constitution or Finance Act says, you must use these funds or money amount under this head says for specific purposes. So Finance Act says specific purposes. As far as our income tax is concerned and Finance Act is concerned, specific purposes means education and health, or to be correct, health and education services. This is the condition this is the condition that is given by our what you call Constitution and Finance Act for spending money from the funds that is collected, government has collected under this head, cess. So basic tax, then your surcharge and cess. Cess, it is additional tax, but the money the government gets under this head to be spent, our government has to spend this money, funds under this head only for specific purposes. And as far as our taxation law is concerned, or our Finance Act tells, the specific purposes means the commitment of Government of India to provide quality health services, best health services, world-class health services, which can be compared to the services the developed countries, foreign Western countries give to their people who avail medical facilities there. So quality health, to provide quality health services and quality education, both quality health services and quality educational services or quality education. The quality education pertains to primary school, secondary school, and higher school, the three wings. So, now the cess, I think you got the fair idea about this word cess. Only thing to be remembered here, as far as this word is, legal word is concerned, cess means additional income tax, and only condition to use money or amount collected by government under this head is to use for specific purposes. And specific purposes, as far as taxation law is concerned, is to provide quality health services to the people, then to provide quality educational services to the people. That way, we have to understand. So, government has to spend for health services and quality health services and quality educational services for primary, secondary and higher level. Okay. So, this is about Income Tax Act. This is all about rather term income tax. Income tax is basic tax, then surcharge is additional tax, and then cess is also additional tax, and condition, see, note the condition, cess amount to be used for this health service and education. Then surcharge, the thing to be remembered is surcharge, the whole amount goes to union, that is central government. And income tax, whatever amount collected under income tax, that also belongs to what you call union, central government, but it has to share. It has to share with the states. It has to share. Government has to give some portion of funds or amount received under the head income tax amount to states respective. And how to give in how this amount to be, how government will give this amount, in what ratio or percentage, what is the distribution formula. There are number of states, so equally or in some other way, equally or some other way, that way I am talking about. We don't. So who will decide this? So there is one agency, it is called Finance Commission. It is Finance Commission that tells everything about what we call distribution of revenue, income tax revenue amount between union and the states. Okay. So this is, I think, 1, 2, 3. You got income tax, surcharge, and your cess. There are three things we have discussed. Now, further we will go. This income tax, government has to collect income tax. Then what are the rates? What are the rate? Natural question, at what rate government should collect the income tax rate? Income tax, not at what rate government should collect the income tax. That is natural question, honest question. So, here, the senior brother of Income Tax Act, that Finance Act, now we'll have some discussion on Finance Act, a short, brief discussion. Finance Act, this is Budget Act, that is passed at the end of the, on the, what you call, before the close of the year. Now trend is like this only, before the close of the year, this act, Finance Act is passed in the Parliament, and it gives the income tax rates. This Finance Act, what is importance of this Finance Act is, it gives us or gives the government income tax rates, at what rates government should collect what you call income tax, your what you call surcharge, your cess from the taxpayers that way. Finance Act tells about these rates. So, as far as rates are concerned, that is given in the first schedule of the Finance Act. Finance Act gives you the rate, gives the government rate, income tax rate, with which government can take the tax. They can use that rates to take tax from the taxpayer. Okay, so those rates, where you will find those rates in the Finance Act, you will find those rates in the Finance Act in the first schedule, in its first schedule. So, if you want to refer after end of my lecture, you can go to Finance Act 2022 because that is still valid, and refer to first schedule of that act, and you will find income tax rates there. You will find what you call rate for surcharge also. You will find rate for your cess also. So, to be brief, income tax rates, this is given in the Finance Act, first thing. Second thing, the rates of income tax differ. Rates of income tax differ from entity to entity to entity. That is individual different, firm different, company different, like this. Okay. So, it differs. It is not uniform. It differs. Surcharge rate also differs from entity to entity, individual, HUF, etc., then firm, company, like this. So, but for to have idea, what is the surcharge for individual? How much individual is taxpayer? Here we will presume individual taxpayer, and how much surcharge he is supposed to pay, or when he is supposed to pay surcharge, or rather when he is required to pay surcharge. Okay. So, for understanding purpose, I will give you a fair idea, firm idea about this rate. The rate of surcharge, as far as individual is concerned, is 10% on income tax. 10% on income tax. If your income, your tax is what you call 100, income tax is 100, then 10% of that income tax becomes 110. 10 rupees, you add that, it becomes 110. You followed? So, surcharge rate is 10%. The only condition is that you cannot take surcharge from individual, from all individuals, all taxpayer individuals. You cannot take like this uniformly from all the individual taxpayers. The Finance Act gives the condition. You take this surcharge only from those individual taxpayers, or that individual taxpayer whose total income, I think you are familiar, we are familiar with total income, already discussed in detail in earlier video. If suppose something you don't remember, you just refer to that video, income, definition of, total income, So, this what you call surcharge, government says, this Parliament Finance Act says, you don't take surcharge from all the what you call individual taxpayers. You take only from that individual taxpayer whose total income, remember, note down, total income goes beyond 50 lakhs. If your total income, annual total income is beyond 50 lakhs, then only government will take what you call from you the surcharge. They will take you on surcharge at the rate of 10%. And 10% on what? 10% on income tax. Okay. So, the figure under income tax is getting built up or constructed like this. First, income tax we have worked out on total income, you know, total income, and then income tax. And I said income tax rates are different for different entities. Okay. So, here we will presume income tax for individual is 100, 10% surcharge, we got the fair idea, that is 100 and it has become, tax liability has become 110, then what you call, it comes Cess. Now about Cess, rate is uniform. For income tax, rates are not uniform. It differs individual one entity to entity. Okay. Surcharge also differ entity to entity. For individual, I told you, it is surcharge is 10% if individuals taxable income or total income. We must remember total, not taxable. Total income goes beyond 50 lakhs, then he has to pay 10% surcharge on his income tax. Okay, like this. And then says, as far as says is concerned, the Finance Act says it will be charged, or government will take the surcharge, this says, from every taxpayer, every taxable entity or tax-paying entity. Who are the tax-paying entity? We have to go to this definition of person, individual, HUF, AOP, AOP, BY, all these people, then firm, then company, all these things. So, this says, government says, or Finance Act says, it should be taken from all taxable entities, all taxable, at the uniform rate of 4%. So, rate of sales is 4% as far as the Finance Act 2022 is concerned. Okay. I think you got a fair idea about the what you call income tax structure. Income tax structure. That is income tax plus surcharge plus cess. Okay. Now, these rates, as I told you, respective years Finance Act gives you the rate, income tax rates, with which you can calculate your income tax liability. Okay. Then, here you have to remember another important thing about income tax rates. Income tax rates are Finance Act, respective Finance Act is not the only source of income tax rates. Remember this, Finance Act is not the only source, respective Finance Act is not the only source of income tax rates. You will find income tax rates in the some sections of the Income Tax Act 1961. Though those rates may flow from Finance Act, but for our knowledge, we must remember income tax rates. As far as income tax rates are concerned, respective Finance Act gives those rates, and with those rates, one can calculate his income tax liability. Okay, and surcharge liability and cess. Okay, then, as I told you, these income tax rates, besides Finance Act, these rates you will find in the some section of the income tax also. In some sections of the income tax Act 1961 also. So what are those sections? There are a number of sections where you will find rates, and as ordered by that particular section, you must obey the section. He says, you recover this what you call income with this rate, then you have to recover tax at that rate only. That is called sectional rate. That is rate contained in respective section or specific section. Okay, so sectional rate, that is. So rates are contained in the Finance Act also, Finance Act, as well as in the some sections of the Income Tax Act 1961, and we have to use those rates for calculating our income tax liability. So this is all about income tax rates. For giving example of what you call sectional rate, that is rates contained in the some sections of the Income Tax Act 1961, I will give one concrete example just for understanding. There is one section in the Income Tax Act 1961, section 112, 112, section 112. That section talks about the profit you get when you sell your house property, isn't it? So that section tells when you sell your house property and you after selling your house property, what are profit you get from that sale? Profit, how to work out profit? That is separate formula is there, but in a simple way. That is whatever after selling you get some money, that is what you call sale price, we can say sale price, and you know your purchase price, at what amount you purchase that house property. You deduct that your purchase price from the sale price, so that is your profit. In a simple language, it is your profit. On that, this section 112 says, this if you have this property like this, if you are working out the profit like this from this source, sale of your asset or house property, then you deduct this whatever, you give the tax at the rate of 20%. So, Finance Act contains the rate, and some section of the Income Tax Act 1961 also have the income tax rates. So this is one example. Section 112 of the Income Tax Act 1961 contains the income tax rate for taking tax at the rate of 20%. Then there is 111A, capital A, section 111A, capital A, that also talks about the rate, at what rate profit that you get when you are holding some shares and you sell those shares. Then you have to pay the tax at the rate of 15%. That is, they call it short-term capital gain. Capital gain, short-term capital gain. What is short-term and long-term, that is apart. But for understanding simple thing, that rate, section 111 capital A also contains or have this income tax rate. So my point is that our discussion is on this point, income tax rates. So we have to remember income tax rates are available in the Finance Act 1961, and income tax rates are also available in the respective or some sections of the Income Tax Act 1961. These are all about income tax rates. We have learned basic income tax, surcharge, then cess, then we have learned about this, what you call this income tax rates. Then we'll go further. The discussion is still going on. And I think it is enjoyable, that's knowledge. But I get more pleasure in sharing the knowledge. I don't know how much, and if you are serious students, you will also enjoy, or you will have the satisfaction of getting some knowledge from me, and my mission is fulfilled if you are happy with my knowledge, sharing of knowledge. Okay. So the next leg of discussion is about what we have learned income tax, we have learned about the surcharge, we have learned about the Cess, we have learned about the income tax rate. Now we'll come to these two important terms, fee and penalty. What is fee? College. You go to college. Fee means we remember our college or school, isn't it? We ask parents, oh, teacher has demanded fee, like this boy asks. So immediately we get that idea of fee. So as far as income tax law is concerned, taxation law is concerned, this fee also revenue source. Fee is also revenue source to the union, as far as taxation law is concerned, and government revenue sources. So fee, that is also goes to central government, isn't it? So this is one of the sources of revenue to the central government, that fee. That one thing you must remember about fee. And this is not income tax, remember. Fee is not income tax. But this word fee has come in the book of Income Tax Act 1961. It has come in the book of Income Tax Act 1961 under section 234 F, capital F. Forget about this section, but just for knowledge sake or just for understanding, remember this fee. The mention of fee is mentioned in the Income Tax Act 1961. It is not foreign to it is not it is very much familiar to what you call to Income Tax Act 1961. Word fee is there in the Income Tax Act 1961 also, and if somebody asks in which section, you tell him this fee word is available in section 234A. Okay, now we'll see why this word fee is coming in the Income Tax Act 1961 under section 234A, or why this word is coming in Income Tax Act 1961. What is the reason? So that section gives the reason for bringing this word in the statute book, that is Income Tax book or Income Tax Act 1961. Why it is brought there? Why government, parliament has brought that thing in the act? So they say, it is said rather, if you fail, you are liable to pay income tax, then it is clear that you have to furnish your income tax return at the close, after the close of the financial year, isn't it? It is simple. If you have got taxable income, you have got income, and that income goes beyond the specified limit, then you become taxable person or taxable entity, isn't it? Then suppose you are taxable entity, And after the close of the year, you have to submit income tax return to the department, income tax department. You have to submit online, online, everything online nowadays, to submit the income tax return. And government says, or the Act says, the Income Tax Act says, this is the date. This for individual, it is 31st July. Every 30, on or before 31st July, like this. That Act says, after the close of the year, financial year, you compute or calculate your income tax liability, pay the tax, and furnish the return by on or before 31st July of every year. And if you don't furnish the return on or before the specified date or the date given by the Act, then government takes the extra money over and above your income tax. That is called fee. That is 5,000 rupees. That if you fail to furnish, you don't furnish on or before the date given by the Act, and then you have to pay the fee. That is 5,000 rupees. This much you remember about me. Now, one small point in this connection I want to highlight is this. When your taxable entity, that means your income goes beyond the specified limit and you have to pay the tax. And you pay the tax, and after the close of the year, financial year, you furnish the income tax return on or before the date given by the Act. So, this thing you must remember. You have to forget the words submit, return, file, return. These two words you have to say goodbye to these two words. Followed? What I mean, we should put our statement like this. I have paid the tax for financial year, this last financial year, 21-22, and this is 22-23. I have to honor before 31st July. I will not utter the word, I will not say the word, I have submitted my return wrong way of putting the sentence, submitted return. It should not be submitted return. Neither it should be I have filed the return. I paid the tax and I filed the return. It is also not the right way to say that I have furnished the income tax return. The right way, correct way of telling this thing or making the statement that for the last year I earned some money and that was gone beyond the specified limit. So I paid the tax and I furnish my income tax return on or before the date or on or before 31st July, last 2022. That way. So word to be used, I have furnished the income tax return. You use this word. Always remember, this is a legal word, approved word by the income tax department. You don't say, I have filed the income tax return. Now there is no question of filing. Everything on online, use of technology. That is online, they say, use the software and send the things to other site like this. Okay. So correct statement of telling you have done what is to be done as told by income tax department. I have done on or before that day to tell this thing, we should not use the words, I have submitted the return, I have filed the return. We should not use these two words, submitted or filed. Use the word furnished. I have furnished, I paid the tax, and then I furnished, to be underlined, to be noted carefully. I have furnished the income tax return on or before the dates given by the Income Tax Act 1961. Okay, so this is about fee. Fee word is there in income tax, and I think you will have actually not what you call seriously connected with income tax, but it is advisable as a side by side knowledge. You just pay the attention to the things I am telling now you about this fee. Fee, as far as income tax is concerned, I told you fee, that is 5,000 rupees if you fail to furnish your income tax return. That is okay. Now that is our subject is complete when we try to understand this word, legal word fee. Okay, and it also it is one of the sources of revenue to the central government, union. This fee, there are two types of fee. There are two types of fee. Fee, first type is this is regulatory fee. Regulatory fee, first type. Second type is service fee, or we can say like this, supervision fee and service fee. Supervision fee and service fee, or alternatively regulatory fee and service fee. Both the words are okay, but proper words are regulatory fee and service fee, proper word. And you can, for your knowledge, convenience sake, you can just remember these alternative words also. That is supervisory services, supervisory fee, and what you call service fee. These are the two types of fee. Now, this supervisory fee or statute, this what you call controlling fee, supervision fee, regulatory fee. These what for this fee is taking? Our fee in the income tax section, in the income tax book, that was 5,000 rupees if you fail to furnish the income tax return on or before due date. That fee falls under this heading. What you call this regulatory fee. That the fee that is mentioned in the Income Tax Act 1961, it comes under this head, statutory, that is supervisory, supervisory fee. It comes under supervisory fee, not under service fee, supervisory fee. And what type of what is the supervision? Who is doing what supervision? So supervision or controlling is like this. As far as our fee is concerned in Income Tax Act, that is section 234F, capital F, that falls under this supervisory category. The department, Income Tax Department has to, after close of financial year, if return is not your taxable entity, last time you paid the tax, you furnished the return, everything okay. But this year that return is not coming to them. They are watching you, they are controlling you. Return is not coming from you, they are waiting. And that last date is coming, it is coming nearer. So, the department gives a reminder to you on your email or on your mobile. They send the reminder. No paperwork. This is the age of technology. No paperwork, paperless work. So you will get message from income tax department about non-furnishing of return in your email box or on your mobile. Okay. So they go on sending reminders. Submit, furnish return, income tax, furnish return, last date is this much, like this. They are alerting you, they are asking you, they are reminding you. So for doing all this work, supervisory work, they charge the amount that is officially or legally or statutorily known as fee, that is in income tax book under section 234 capital F. Okay. So that is. So here this what you call this supervisory fee and your service fee. So supervisory fee we are discussing. So one thing is clear, that is our fee, income tax fee, that is the word used in the income tax book, is falls under this supervisory services, where this what you call fee is of two types. Supervisory fee and what you call service fee. So supervisory fee, the income tax department supervises the things. They are supposed to, what they are supposed to under act to do, that they are doing that work. So for that supervision they charge, and that amount is they take in the form of fee, that is 5,000 rupees to 5,000 rupees, that is given there in the income tax if you fail to furnish the income tax return. That is the condition. Then there are what you call there are hotels, there are hospitals, stock exchanges, then race clubs, all these entities are there in the market. So these entities are to be regulated. Their activities are to be regulated. So this fee and supervision fee, that for that correct legal word is regulatory fee, and simple word is supervision fee and regulatory fee. The proper word, legal word is regulatory fee. So we are discussing regulatory fee here. So department takes the regulatory fee in the form of rupees, in the form of 5,000 rupees. And now second is your hotel, then hospitals, then stock exchanges, then race clubs in the country. These entities are to be regulated. Whether stock exchanges, are they working properly or not, that is to be regulated. That is to be checked also, that is to be watched also, that is to be regulated also. Okay. So for that, for this, some agency does the work, and what you call they take the amount, some amount from them, that is called regulatory fee. Our income tax, that is fee, that is also regulatory fee for issuing reminder. So here, for this controlling these people, the stock exchanges, then hospitals, then hotels, then your race clubs, all these things, all these entities, they are to be controlled properly. Then hospitals and hotels, whether they are keeping up to the standards of maintaining hotels or hospitals as per the standards, as per the laid down statutory standards, whether they are keeping those standards or not. Those things, some agency will do that thing, that work. Some agency will do that work of ensuring proper standards of hotels, hospitals, whether stock exchanges are working as per the guidance or guidelines, or as per the regulations given by the government. All these things, some authority has to look after all these things. So for doing this work, they charge the amount, and that amount is called regulatory fee. Then there is service fee. This is another shade or type of this word fee, is service fee. Now service fee, as you say, it is simple. Service fee, you you go to market and you want to park your car or your two-wheeler, then safest way, not to park on the road where that board is standing from the police, that you should not park here and you are parking there for your convenience. So what happens, if you park there, some police will come take your vehicle and you have to pay the money for that, taking back your vehicle from them. So that is not the safe place to park. Even it is convenient, you have to park some authorized parking place, and you go to that authorized parking place, you park your two-wheeler or car, and you pay some money to the caretaker there. So that amount is, we can call that amount as parking fee, and that comes under the service fee. That is where taking service, availing service of parking service, we are availing. That is why this is called service fee, parking facility. You avail parking facility and pay something that comes under service fee. Then you take driving license. So what you pay to the RTO for taking driving license? You pay some amount. That is fee, driving license fee. I paid license fee this much amount. So license fee, that come under service fee. That is for giving the license. This is a service. They give license. They are not giving you some goods. They are giving license. They are giving service. So they take some amount, and we can call that amount as service fee, license fee. That comes under service fee. Then passport authority, they take your, they give the passport, they make passport for you on the basis of your application, and they take some amount. So that amount we may call it as passport fee. So this is for giving service. We give this amount to the passport authority because they have given us service. They have given this passport to us. So this is the examples of service fee. I have given the examples of regulatory fee and service fee. So knowledge is like this. When we talk about fee, we have to go to section 234F, capital F. There 5,000 fee is there. That comes under a regulatory fee. Regulatory fee. And these hospitals, hotels, stock exchanges, race clubs, so all these people, they have to be monitored. Their work conditions are to be monitored. For that, some amount, those authorities, those controlling monitoring authorities, they take from the these people, that is hospitals, race clubs, etc. So that is comes under regulatory fee, and service means all these things. Okay. So another thing about this fee, regulatory fee and service fee. Regulatory fee and service fee, this service fee, no doubt Finance Acts allows it. Finance Act or Constitution, for that matter, constitutions allows it. Taking what you call this, what you call thing, your fee, that is income tax, surcharge, cess, fee. Constitutions allowed it to central government. You take this, what you call, all these things you take and carry on the work. That way Constitution said to union, central government. So, this collection work of service fee is done through some authority. It is done through some authority. Some authority is set up. That authority collects all these things, fees. So this is not through some authority. These services, this fee is fee under the head services are collected. This is about this what you call your fee, income tax, surcharge, cess, fee. All these things, union can have it, the central government can have it as in the form of revenue, but the very big condition, Constitution has given, or rather put forth, a very big conditions for the union. If you want money under these heads for running your administration or running your government, to manage your expenses, then have all these things, revenue through all these items. But only on one condition. And what is that condition? You must get the law, you must get appropriate law passed in the parliament to have this revenue under all these heads. That is the items of central list, that is income tax, surcharge, cess, fees. That is fees. All these things you can have, but only on one condition. You must have law passed by the parliament to collect this money under all these things. That is the basic condition. They call it precondition for taking money under all these heads, income tax head, then surcharge head, then cess head, and this what you call fee head. Under all these heads, if you want money, then you must have law. You must pass the law in parliament and then have the money under all these things and manage your expenses that way. So, basic condition is to have the law to do all these things. And what is those laws? What is that law? The law is the younger brother and senior brother. There are two laws are there. That is Finance Act of respective year and the Income Tax Act 1961. Income Tax Act 1961 is the structure, is the mechanism, is the procedure of collecting tax, and in Finance Act is the proper authority to support that, to give them, feeding them rates, income tax rates. Take take tax at these rates like this, and and these two rather finance acts fulfill the constitutional condition. The Finance Act fulfill the constitutional conditions of the Union, that Union can have revenue under these sources, provided you must have the proper act passed by the Parliament. So, in respective year, Finance Act is the proper law that enables the Union to take the money under all these heads from the taxpayer. This is, I think, clear. Now, last thing will come to what you call penalty. Penalty, there is penalty, not that what you call physical penalty. That Indian Penal Code, punishment book says, whatever wrong things you do, for that punishment is given there in that book. For various wrongdoing, that is offences. Okay. So not that penalty. I am talking about here about pecuniary penalty, financial penalty. It involves the payment of money to the government, that way, penalty. So penalty, that is legal word, that is our Income Tax Act 1961 is it uses these words, it uses these words frequently and heavily in the Income Tax Act 1961, and it is all the it shows penalty. It shows the very harsh nature of the your Income Tax Act, taxation laws, harsh nature, penalty word. It is available in the income tax book, and it shows the harsh nature of the act. What act can do? Act can do you good, and act can do worse for you, like this. So, penalty is not income tax, as you just remember, penalty is not income tax. Your fee is also not income tax, isn't it? But it is added there in the income tax liability as a separate head. So penalty means just penalizing the person financially, penalizing a person financially. So how Act gives the penalty? If suppose you give knowingly, you know everything what is truth, but you hide that truth and give you wrong information to avoid the tax. So if you all these wrong activities, financial activities, just to avoid income tax, if you are not honest, then you take all these dishonest ways to avoid the tax, which Act doesn't like. Income Tax Act says, be honest, be honest, show everything which is true, and pay the tax, and be happy, and let the people live happily, like this, isn't it? So that way, penalty, if suppose you hide something, you don't show an income which is not true. So what happens? If suppose you spend some money for purchasing something machinery or import of machinery, something heavy items, and you income tax department or income tax officer, he technically, legally, he is called assessing officer. If income tax officers ask you, oh, you 1 crore you have spent for bringing this machinery from Germany, show me the proof, show me the vouchers, invoice, bills, like this. If they ask online, everything online, give the proof, submit the proof. So what if suppose that businessman company fails to submit the proof? Naturally, and it is found, he fails to furnish, and income tax department also finds he has not purchased but simply he has claimed, like this. So he has to face the punishment then. He has to face the punishment. Then income tax says how much, the income tax in such situation says, see, how much harsh I am. How much harsh I am. There is penalty in the book, and extreme penalty is there, minimum penalty is there, both the extreme and minimum penalty is there. Then according to the wrongdoing, according to the offense, that is non-furnishing of proof, it will what you call, it will income tax act will punish him. He will punish him harshly. He will punish him harshly. And minimum punishment and maximum punishment, I have told you, if you are honest, government will give you certificate. That is honest taxpayer. That certificate with the what you call string you can have around your neck and show to the people. They will suppose some near close friend is. Then if we see that, what is this thing you are actually wearing in the around your neck? Then if you read carefully, honest taxpayer. So for honest taxpayer, the department, income tax department, gives him this honest certificate, certificate of honesty or honest taxpayer, like this. And if he is bad person, disobedient, he does not obey the income tax law, for him this act punishes him, and the extreme punishment under specific condition, the department may send you to jail through the judiciary, through the courts. Extreme, because it avoids what you call physical punishment. Income tax, the aim is to collect revenue and not to go for this what you call punishment work. That is not the focus. Focus is on collection of revenue. But in extreme thing, they want to fool the government, and they want to achieve the mastery in dishonesty. If some entities, they want to achieve the mastery in dishonesty, and the world has got such people, entities, isn't it? You know, I also know. So, these masters, so this what you call act is very angry with these people and punishes very harshly. So in extreme situation, that department, income tax department, may also send that wrongdoer to jail through the process of court. Okay. So I think this is all about our income tax, surcharge, cess, fee, and penalty. Okay. I think I have given justice to the topic, tax topic, and we'll have another basic things we will learn in due course. Till that time, okay, have a good day.